Hey, it's Catherine. I'm here with Mr. Anderton from Bank of England, and he is going to answer my questions about credit scores because I know not a whole lot about credit scores. So hopefully he's here to shed some light about how we can be buyers of houses instead of renting them. So, Mr. Anderton.
Okay, one of the misconceptions is the amount of down payment required to buy a home. And a lot of people think that there's 20% down payment required. That's not true in today's market. There's products out there that are 3% down products, conventional, and 3.5% down FHA, and other government products that have 0% down, such as VA and USDA. The first step to buying a house is establishing some credit. So if you're a brand new employee or worker or just out of college and you don't really have any credit as yet, there's a couple of ways to do that. The best way is to get a credit card. Some people have applied for credit cards and been, denied because they don't have any credit. So
That's me.
So one way is to go to a friendly family credit union and get a deposit guaranteed credit card, which means you give them $500 and you have a $500 line of credit with that bank now. So what that allows you to do is to establish a payment history. You use that credit card, you pay it, you use that, you pay it. So after 6 months, you have a pretty good credit history if you've been paying that bill on time, using it, paying it down, using it, and paying it down.
Now, I have a quick question for you. So, a misconception that I just recently found out was not true is you get a line of credit, say you have $500 worth of credit, you spend $450 every month, but you pay it off. That actually winds up hurting your credit score. Can you explain to us why that's the case?
Well, they do want to see you using your credit. So having a zero balance is not the best thing to do. They want to see that you have a balance, usually less than 25% of the available credit. The more of your available credit you use, the more dings or hits you take on your credit score. So one thing to think about is show them that I have credit, I'm using it responsibly, but I'm keeping it open, because just having a credit card that you never use is not showing that you know how to manage money. It's showing that you've got a credit card.
Okay, so if my monthly bill for gas and groceries is something like $500, I should try to have a higher credit card limit of closer to $2,000 or $3,000, and then just pay off my regular monthly bills and not worry about trying to meet the high credit limit every month.
That's correct. No matter if it is a $500 limit or a $3,000 limit, the percentage of credit that you use is what they look at. So if you use $400 of a $500 credit, then you're gonna be penalized for that. So you want to have a credit card that has a balance but not a large balance. So use it, pay it down, use it, pay it down.
All right, I can handle that.
Yeah.
Sounds good.
So now that you've established credit, you're looking at buying a home. So let's talk about a real world scenario of what it really costs to buy a house. We're going to use an example that's a fairly, it's a pretty big step for a first time home buyer, but I just did this. So first time home buyer bought a $141,000 house. Their monthly payment ended up being taxes and insurance all in was $1,025, and they brought $5,000 to the closing table.
Wow.
They had some seller credits, which means the seller paid some of their closing costs, but that's cheaper than rent. If you're out there looking in the market, you know that a good apartment, a nice house, is $1,000 up, and you can buy a house, get a roommate, and start building wealth quickly and right away.
Yeah, that's something I'm definitely interested in. I'd like to own real estate as a way of income and not just personal housing. I'd like to double up, do both of them. What are some things that we should avoid as far as creating poor credit? I know there are certain things you shouldn't do, like buy a new car right before you try and go get a mortgage. Are there any other little tips you can give us and explain to us why that is?
There is a factor called your debt to income. So you don't want to take on more than you can chew. Even though sometimes you can justify that cost and you can afford it, once you're spending a certain percentage of your income, and on most products it's around 45%. Once you have that committed every month for housing and cars, credit card, student loans, then they're not going to let you borrow up above that. So try to stay within your means and keep that number in line. A lot of people can afford more house than they want, and a lot of people can afford more car than they need. So the best thing to do is keep that number in mind. You want to spend less than 45% of your take-home pay on monthly bills, credit cards, car payments, student loans, housing.
Okay. Now, are there any other questions I haven't asked you that you want to address real quick?
No, we just really want to talk about how easy it is to get into a home these days for people that have that desire. Okay. It's not expensive, it's not hard, it's not complicated. As long as you're ready, then they're ready for you.
Now, what do you do if you have student loans? If you have any issues where you haven't paid those off every month like you're supposed to? Do you guys have any workarounds for that, or any tips on how to fix that situation?
Yeah, student loans are out there a lot for people these days, and there are some calculations that are used regardless of what your payment is. For example, they use 1% of your outstanding balance as your responsibility. So on some programs, just depending on what your credit score is what affects whether or not you paid your student loan. If you had a couple of missteps, that's not going to hurt your credit score too bad. You're not going to be perfect, but nobody is, and you'll probably be, if that's your only problem, you're going to be well within the parameters of being able to purchase.
Okay, awesome. Well, I know I've got a lot of friends that they've got their student loans, and that's one of their biggest reasons that they assume they can't buy is because they have a student loan, they were late paying a couple of months or something like that. But it's nice to know it's still an option. We can buy in place of renting, and that builds your wealth that much sooner. If you're going to be paying this bill no matter what, it makes sense to be putting that money in your own pocket in place of somebody else's.
That's right. The best thing to do if you're curious is to call us, and you can reach me at 251-591-7037, and we will end the mystery in about an hour.
It's true. He knows what he's talking about. He's helped me out a lot with my credit, and I really appreciate it.
All right.
All right. We'll see you later.
Thanks.
Bye.
Bye-bye.
I can finish.